In today's world, not taking any risk is actually the biggest risk. Guys, welcome to your channel, and my name is Karan. In today's video, we will be talking about what is a risk. What is a risk? What are the risk tolerances? Your risk tolerances? How can we manage a risk? These kind of questions we will be discussing. We will not delve into how many type of risk, etc., but on a high level we will understand risk. Okay, so let's get started, guys. So what is the risk? Guys, when we talk about risk, it is basically an uncertainty, any uncertain event which could impact your investment negatively. Your investment value might go up or go down. So it's an uncertain event. You do not know. Quick example: what is the risk? For example, you have investment in stock market and there has been a government change. So how the market will react, you do not know. Your investments could go down, could go up. You do not know because it's a risk. It's an uncertain event in the past. There is a war going on right now. So your investments might behave differently. It's a risk, right? Then economic changes in the country, government changes, war, geopolitical events, maybe a pandemic. We have seen pandemic, stock markets 50% went down. So these things are nothing but risks. So it's an uncertain future event which will have a impact on my investment. So most of the time I have seen negative impact, so that's a risk. So what is risk tolerance? How will you know your risk tolerance? How much risk you can tolerate, and what will be your behavior, your strategy? So to understand your risk tolerance level, you have to just observe yourself. For example, how was your behavior when market crashed 50%? Were you in a panic mode? Were you selling off your investments with a fear that the market will go down even further? Or were you steady? Wait and watch strategy was used. What was your thought process? That will only give you the answer of your risk tolerance level. What were the decisions you took when a market behaved maybe haywire? Maybe it was going down. Again, how did you behave when there was a bull run, when stock market was going up? What were you doing? Were you selling your investments to cash in of the growth, or were you giving yourself some time? So that will tell you how strong you have built yourself. Your risk tolerance level is determined by your past actions. So just view yourself, just review your actions, your decisions. Okay, that will tell you how comfortable you are with risk and how much risk you can take. You want to go into equity market or a debt market? You want to stay with the traditional product like fixed deposits, recurring deposits, post office schemes, etc. So that will tell you. Great. So now I want to talk about how we can manage risk. We have discussed what risk is, what is my tolerance level, what causes risks. We have seen market conditions. Now, how will you manage the risk? Managing risk is, I will not say easy, but it is simple. It is not easy, but it is simple. You need to first diversify your portfolio. Old age saying, don't put all your eggs in the same basket. Similarly, you have 1000, you can put them in 10 different investment buckets. Some in equity, some in debt, some in real estate, some in national pension schemes, some in public provident fund, some in bank FD, some in gold, some in silver. Are you catching my point? Everything will not go down at the same time. You're catching my point, right? So things should be distributed. basis your life situations, basis when you need the money. Okay, so maybe a detailed video I will make in all these categories: equity, debt, gold, silver, real estate, national pension scheme, public provident fund, RD, FD. Just imagine you have money in all these portfolios. Everything will cannot go down. If the stock market is down, gold will be up. If real estate is down, something else will be up. If gold is down, equity will be up. Are you catching my point? So maybe you might be at different stages of your life. So if you are in need of a cash, you can easily pick from any of the products which is liquid. You can sell it off, provided you have some let's say 6-7 months of emergency fund as well. So the point is diversification, good asset allocation. You got the point, right? These are all your assets: equity, debt, mutual funds, your pension funds, your public provident fund, your employee provident fund, your RDs, FDs. These are nothing but your assets, guys. So asset allocation, you distribute it among all the assets and they will save you, right? Great. So we have covered risk. We have covered what is the risk, what causes risk in the market, risk tolerance, how can we manage the risk. If you like the video, give it a thumbs up, give me some comments. I really appreciate it. I thank you for your time, guys, for watching this video. We will talk again. God bless you. Manage your risk well. Do good diversification. Do good asset allocations. Enjoy the investment journey, guys. Take care.